Lift off.
All right, guys, welcome back to another episode of Trades Talk, weekly update number 49, coming to you right now. Hey, before we jump into today's episode, if you've been watching my social media, I've got a pretty cool little robot that we deployed last week here at the house, the Crest KR250E. It's called the iPilot. It basically has vision technology so it can do self-mapping. It's as easy as taking it out of the box, putting it on your lawn, and hitting map. And with the vision, it just goes around the border, it maps the area, and then it mows the area. We stationed the little docking station, charging station right off to the side of the turf here. And the cut quality is incredible. It's really a great machine. If you do residential lawn maintenance, I highly recommend checking out this iPilot, especially if your properties are a quarter acre or larger. That's, I think, where at least from what I've been able to understand, where the payoff starts to really make a lot of sense. And you can start to automate a lot of this mowing. This is really a new level in the landscape industry, this autonomous mowing, and it's picking up a ton of speed. So if you have not demoed some of the Crest robotic mowers, especially the Voyager, highly recommend doing a demo and seeing if today, tomorrow, this season, next season, at some point you're going to want to start to automate your mowing routes, at least some percentage of them. And Crest has been the partner for us. So I'm excited to see where that goes, but thought I'd update you guys on that right away. Okay, let's get into it. So the top 100 list is out with lawn and landscape. A lot of, I don't want to say controversy, just a lot of conversation around it this week. So that's been really interesting. We got our first Disruptor Day coming up June 11th. If you guys have not heard about that, don't worry, we just announced it yesterday, but it is already booking up super quick and we have a very, very limited number of seats. So if you are interested in that, you can go to jwhitegroup.com and click on events. You can check that out. It is free for Disruptor members, or there's a fee if you're not a Disruptor member, but definitely an exciting day. We're going to do a shop tour at K&D. We're going to just talk a little bit about how we are utilizing artificial intelligence within our business and show you, if you attend, exactly how maintenance and construction and support are utilizing mostly Claude to create workflows within the business and exactly how we're doing that. So if you're interested, it could be a good way to really take that AI knowledge to the next level. And part of that day is Sean, our manager of technology and innovation, will be actually teaching everybody to build basically an executive assistant agent to help you do a daily brief and help manage your email a little bit more. So we've got some pretty cool workflows built out, more on the way, and should be a fun day. Directly after that, June 12th, we're doing the Water Summit, Central Coast 5th Annual Water Summit. Super excited for that, and might as well make a week out of it. Come in on Wednesday night, hang out with us on Thursday and Friday, and stick around on the Central Coast. It should be a nice weekend, as most weekends are here in California. Okay, let's get into the top 100 list. So some pretty interesting statistics. One is that 39 of the top 100 companies are private equity backed. And most of those companies at this point are a true platform. So when I say platform, I mean that they are a company that has been backed by private equity, and that company is now purchasing other businesses. It's really important to understand the private equity playbook because it's playing out in full display in the landscape industry. It's a masterclass. They're doing an incredible job at creating a lot of wealth for their investors and for many landscape professionals and owners. But at the end of the day, this is still an industry that is very highly fragmented. So although there is a lot of private equity influence, by no means has our industry been quote unquote rolled up. There's still a lot to go before we get there. While there is $20 billion in combined revenue on the top 100, when you really zoom out and you think of the entire industry, that's not a substantial amount of the total market. I think, I've heard figures of anywhere from 180 billion to 400 or 500 billion in total market cap in North America. And so, if we take some numbers around that. Maybe this is only 10% of the total market share that is consolidated in the top 100 companies, which, while it does seem at first glance like a majority of the industry, it's not even close to that. I think there's still a lot to happen and a lot to go. I also know that there's a lot of companies that are privately held who just don't bother with the top 100 list. There's just not a lot of value in it for them, so they just don't report. There's just no reason for them to report to the list. So you have to assume there's a substantial amount of companies between 50 and 100 million in revenue that just don't show up in this list because they just don't feel like it. I know that because I personally know a lot of these companies, and I'm not going to shout them out because if they wanted to be shouted out, they would have reported to the list. Now, I posted something on LinkedIn on Tuesday that just took off and got a bunch of traction because it all started when I was looking at the list on Monday and I was reading all of the names. And I usually start from the bottom to see who's new on the list. A new name caught me off guard because of their location. It's called Integrity Partners. And Integrity Partners is located in Morgan Hill, which, if you guys don't know the area that we operate in, we operate in Morgan Hill, we operate in San Jose, down to San Luis Obispo, the greater Central California. And Morgan Hill is an area I know very well. And so when I saw this brand, I was like, what? Integrity Partners? Like, I've never seen them. I've never heard of them. And so I started doing some digging. And Integrity Partners actually purchased Medallion Landscape and City Leaf Landscape, and most recently Serpico. I was like, all right, now this is starting to ring some bells. I mean, we know City Leaf, Serpico, and Medallion very well. Three, I think, great companies. They all have their own niche that they focus in on, and they do very well. Medallion's probably one of the most well-respected Class A commercial landscape companies in the South Bay area. But that was something I posted. I said, hey, it's interesting because we see Medallion Landscape out here with all their trucks, but since they were rolled into, a holding company with a few others, now they're a, $44 million platform reporting under a shell name, which is Integrity Partners. And I decided to dig a little deeper, and I was like, all right, well, how did Integrity get started? Who funded them? Who started them? And it was really interesting because they're actually backed by Seacoast Capital. So Seacoast basically provided redeemable preferred stock in the deal and stood up the corporation of Integrity Landscape Corp with two executives. And Seacoast is then backed by Galaxy Group, which is an independent-led sponsor of the deal and the platform. And then you also have White Oak Global Advisors providing debt for the platform. So you have, this is complicated, guys. I'm sorry, I'm going kind of deep here. But you have Integrity Landscape Company, Landscape Corporation, that has rolled in 3 landscape operating companies. And then the Integrity Landscape Company is backed by Seacoast, White Oak, and Galaxy Group. So 3 layers of capital sitting into a holding company that's operating or managing these 3 landscape companies. So the reason I wanted to unpack this is because it's just a really great example of what's happening in the landscape industry and why decisions on how the company performs are being made layers and layers away from the field. And while that's actually a major opportunity for a lot of local privately held companies who see themselves as maybe a little more agile, maybe a little more connected, maybe you want to build relationships with your customers as the owner. If you're competing against a Medallion, let's say, this is great information and this is all publicly available. It's not like I'm, doing any kind of hacking here. I'm just literally doing a quick Claude search and it's all publicly available on Pitch Deck or Pitch Hub and other things. So what's really interesting about this is Galaxy Group, who is the lead independent sponsor in this whole operation, is actually a niche service investment business focused on wellness, IT services, consumer products, and digital infrastructure. Like, I guess niche business services could be considered landscaping, but I think more of lawyers and marketing agencies and those when we talk about business services. Either way, Galaxy in no way, shape, or form within their stated thesis on their website or anything I can find publicly has anything to do with landscaping. So why are they involved with landscaping, right? That's the question that I ask myself. And I say, well, it's a deliberate bet on the consolidation of our industry. It's a deliberate bet that they believe the landscape industry is a great place to put their money. We're seeing more and more of this activity and more money flowing into the landscape industry from companies like Galaxy Group that typically has focused in IT, software, consumer products, digital infrastructure like data centers. Now, it doesn't mean they're not still investing in those verticals. It just means they're starting to de-risk or they're starting to change their portfolio thesis because they see the coming headwinds of artificial intelligence. No longer can you just make a bet on a SaaS company and think you're safe, because AI could wipe out that SaaS company immediately. Or even a marketing agency. With what Claude and Meta are working on right now, which you guys should definitely check out. Basically, Claude is connecting to Meta, allowing you to manage all your ads through Claude prompts and through Claude Cowork. So you don't even have to code. It's very easy. And that is wiping out thousands of ad-provided companies that provide ad support and, manage ads for companies. So this is a really interesting move. Now, enough with integrity, but I thought that was really interesting because I think that shows what's happening, the different layers of capital that are being structured on top of the balance sheets of these landscape companies, and why sweat equity and your ability to grow a company organically is going to provide the best return on your investment right now. Now, if you are looking at selling soon, this is a great time to sell your business. We've had a lot of naysayers actually in the industry that say the private equity bubble has popped. We're on a downturn. We aren't going to see these companies recapping at multiples that make sense. But Landscape Workshop, Shield Grounds Management, a number of others have recapped in the last year and have brought in amazing substantial multiples on their revenues and their profits. So it shows that there is a second layer of consolidation happening right now. And if I had to guess, over the next 12 months, we're going to see a lot more of that. We're going to see a lot more of the larger platforms recapping and bringing in new levels of capital, new levels of debt, and probably rebranding under some new names. You could see Shield Grounds Management went over to the Landscape Collective, which is like such a great company, and I have nothing but respect for Jerry and his team and what they're building up there. But I will say it's interesting when I see platforms going with the non-branded approach. And Landscape Workshop's opposite. Landscape Workshop is like, you're going to be the Landscape Workshop brand within X amount of months, like no questions asked. I think you're going to see those companies that are fully integrated with one brand trade at higher multiples. The best evidence that we're seeing right now is Sperber and Mariani. They have crazy revenues. They're way up on the top 100. They're crushing in terms of revenue. But it'll be really interesting to see how those larger companies, as they approach the $1 billion revenue mark, recapitalize their balance sheets with a family of brands rather than an integrated company brand. So that'll be the next test. But either way, there's a lot of dry powder out there and a lot of money looking for a home in a stable industry like the landscape industry. So stay tuned on that. Now, a lot of people were asking, why am I so interested in the top 100? Why do I care what's going on? Well, as you can hear by listening to this podcast, I'm very, very interested in this landscape industry and what's happening within the landscape industry from a financial perspective. I love to see companies like the Grounds Group on here that was not on the list last year and jumped onto the list out of nowhere with $60 million in revenue. Shout out Grounds Group. Way to go, guys. Like going from not on the list to on the list with 60 mil, that is, and so that puts them at tied for 65 with Klein Bros, right above Harvest Landscape, Haven and Earth Landscape, Caretaker. Those guys are all privately held. Augusta Lawn Care, privately held. So these are companies that do not have private equity backing, which at the end of the day, I don't have anything against private equity. I absolutely love what they're doing. But as a company myself, that I run a privately held company, I just assimilate and am rooting for the non-PE backed companies. It's nothing against PE. It's more of how fast can we grow organically without leveraging a bunch of debt and without taking on a bunch of equity. Truth be told, I would much rather empower my team through shared equity and help them have more skin in the game so they can go and win for us and grow and build a better organic company, a fast growing organic company, than a buy and build strategy. Now, does that mean I make more money or not make more money? Who freaking knows at the end of the day? But as a disruptor, as someone who looks at the industry, looks at where everyone is moving, the buy and build consolidation route is the flavor of the week, if you will. My initial strategic move is to do the opposite. I just feel like if you're listening to this and you consider yourself a disruptor, now is the time to focus on organic growth. Now is the time to build your growth engine. Now is the time to invest in the company that you've always wanted to build, because there's almost going to be this guarantee at the end of the day that you're going to build a sellable company if you have organic growth above 30% at scale. So if you're over $10 million in revenue and you can maintain 30% a year in growth, you're going to have a fantastically sellable business. There's a lot more that goes into that. The other thing I want to mention, I know we're going a little long today, but that's all right. The other thing I want to mention is JT Price was quoted in here saying, I'll paraphrase it a bit here, but what he says about the top 100 is the reason we're seeing so much consolidation is that software has finally made this very possible. And that right there, that has a lot to do with what Aspire has built out. So let me actually just give you guys the true quote. People say the industry is consolidating because of private equity. I think the industry is consolidating because of software that allows you to run a good landscape company at scale. And private equity is just an enabler of that. That's from JT Price from the Landscape Workshop. JT's got a pretty amazing financial background. One of the most intelligent operators I've ever met. I've had some opportunity to sit down with him. And I think that's a really interesting quote. It's basically saying that software is the enabling factor here. Private equity is just the fuel powering this consolidation. So my question to you, if you're listening and you want to grow your company, then why not use the software that they use to grow your company and run a great landscape company at scale? That's the opportunity you have here. And if software is the reason consolidation is possible and running a good landscape company at scale is possible, well, we're kind of good news here, because software is getting ridiculously better every single day. Like every day there's a new product coming onto the market that can help you run a better landscape company. A lot of it is noise, but there's some good stuff out there too. So I thought that was interesting. We're gonna wrap with this. Big shout out to 3PG and Jeff Harkness, great friends of ours. They've done some amazing things with K&D, helping us understand our business at a deeper level. 3PG and Jeff and his team sponsored the Top 100 this year, and he wrote an incredible letter that everyone should go read. At the end of the day, 2 million to 30 million EBITDA range is where the highest multiples are being seen. Coastal markets, south, southwest, especially Florida too, are seeing some of the best returns on multiples. And he says that the private equity industry is literally calling the landscape industry the super highway for PE returns. What a time to be alive, guys. Top 100 in the landscape industry, controlling $20 billion of total revenue. A lot going on here. Brightview, of course, at the top of the list. feel free to dig in. Big shout out to Lana Landscape, Brian Horn, the whole team for putting this together. And stay tuned because we got the top 150 coming out very soon from Landscape Management Magazine, which we'll have another discussion then. See you guys next week for a weekly update number 50.
Thanks for tuning in to Trades Talk, where the next generation of disruptors comes to raise the bar. If you got value from today's episode, share it with someone in the trades who's ready to level up. For more tools, insights, and community, follow host Justin White and join the movement at jwhitegroup.com.